latest development, as we usually, the usual structure of our meetings is very, very simple now. We're talking about like groundbreaking news, not like all news. All news you can read CNN, or you can watch something else, wherever it's easier, whatever is easier for you. But we're going to talk about events that influence the crypto market the most, in my personal opinion. I mean, it doesn't necessarily have to be your opinion. I mean, and I will be glad to hear your opinion on that. Then we're going to talk about a couple of things, which pertain directly to what the title of our meeting, Crypto Trading School. We're going to talk about algorithmic trading in a little bit more details than we did before. And I'm going to tell you about very simple the strategy that is used both by beginners and by the sharks of the business. It's price action strategies. These are something that is based on purely on the price of the asset that we're talking about. Okay, so well, before we start, as we're starting, I want to show you what's going on in the market. I mean, I'm sure you all crypto maniacs and Bitcoin maniacs maybe, and you know what's going on. You know that Bitcoin is basically just a small touch away from the all-time high. Actually, maybe as we speak, it is already there. I don't know. But this picture is taken, I think, a day ago, yesterday, or maybe this morning. I don't remember. I think yesterday. And at the moment, it was 19,212. You know that it already broke to 20,000 level for a very, very short time. So we're here to wait and see what's going to happen. So, as I said, Bitcoin is back, but we've already seen that some time ago. We've seen that exactly 3 years ago, and also at the end of the year, it was December, as far as I remember. Well, of course I do. So it was December, and Bitcoin was on its all-time high. And 2017 was like major year for Bitcoin, major year. I mean, it started, it grew up 2,000%, I think, something like that. I mean, and it returned from something that everybody thought very obscure and very, you know, like out of the main range of things into something that everybody talked about. I mean, I've even seen, I'm a fan of this TV show, the theory of Big Bang Theory. And, you know, even one of the episodes was about Bitcoin, how it grew and how much money it brought to some people. So we're seeing basically similar thing, and I hope that it's not going to be all similar, because we know that after its groundbreaking sky level, move to the moon motion, it went down, and only recently it started its ascent, and it went down to like as much as $3,000 per Bitcoin, per coin. So what is different this time around? Very, very simple. Again, this is my personal opinion, but actually it fits into opinion of many colleagues of mine. In 2017, the Bitcoin was moved up by the hype. I mean, there is a very, very simple explanation. It was moved by the hype. And you remember, probably you remember, all these ICOs, I mean, things that moved interest of everybody to the highest level. I mean, people were, cat coins, dog coins, nothing coins. I mean, they all grossed significant amount of money. And this was a bandwagon everybody tried to jump on. And only like cautious people were thinking about what's going to be next. So this is what is different this time around. Last time, 3 years ago, the upward motion of the price was actually fueled by the hype. I already said that. by the interest, all of a sudden interest of everybody in the world to this obscure thing which is called cryptocurrency, which is called Bitcoin. This time is different. What we have now, we have that today's rally is backed by institutional investors. Many major investors, investing houses are already in Bitcoin. And it's also moved, if we're talking about individuals, it's moved by people with a lot of money. And these people always know where to go. And if they go to a casino, for example, just watch them and do what they did. I'm kidding, of course, you know. But this time around, it's totally different. It's also the technology has evolved and changed. And this time around, of course, there is hype, but it's more objective. The movement of Bitcoin is more objective. And what exactly are objections? I mean, look, PayPal, the first push that the coin got this time, this rally, was by PayPal announcement that it is going to use, select and accept cryptocurrency as for its payment. And they said so, and actually they kept their word. At this moment, up to 70% of all newly mined coins are bought by PayPal. This is huge. This is really very, very big. And that actually tells people that this is something to watch. Now, as I already said, institutional investors are behind the rally. And also, not the last and not the least, is that liquidity crunch. I mean, the situation with Bitcoin, there is really the major exchanges are announcing that they don't have enough coins to fulfill all requests. And individual miners, their inventories are down because they had some whale sort of stuff in their pockets, but they actually, it's all on the market. Not all, most of it is in the market. And on an amusing side, a thing that actually tells us that Bitcoin is really moving, becoming part of our life is there is one major poker site which pays its clients on their request in cryptocurrency. And this particular poker site last month paid $100 million to its customers in Bitcoin. That's in my mind, but I think that's important. Where do we go from here? We already talked about it, and I'm sure you've heard a lot of things about it, a lot of suggestions, prognosis, and sort of, some people say 20,000, some people 50,000, some people $1 million. Doesn't really matter. We know that the market is mature and nothing is going to stop this ship. The wind is blowing in the right direction. So this is what I'm sure, and you're sure about it. And I'm sure that next year, unless something like this year is going to happen, but in terms of crypto, it's going to be a very, very exciting year. Don't know what's going to happen until the end of this year. Some people say that major profit taking is going to take place. Doesn't matter. I mean, the trend is upward. It's easier to trade cryptocurrency, at least Bitcoin, a lot easier than trade other than, say, Forex, for example, because of the trend. And there are very, very, I would say, at this point, very low and very quiet words of caution that saying, like Lior Mesika from one of the major companies, if you're interested, I'll tell you which company it is. Still, the Bitcoin use is still very questionable. I mean, it's not mainstream yet. Yet is the major word here. Okay, I just want to show you, we spoke about fundamental and technical analysis last time. I just want to show you one small, not confirmation, illustration of what actually is going to happen, might happen when a major news breaks. Look at this picture. This day is the day of election. So basically the results were announced sometime here, and this is what happened to Bitcoin after the fate of the next US president was decided. I mean, I know you are going to tell me it's still not decided, but actually it was not decided until I think day before yesterday. Day before yesterday, Trump agreed to transition of power to Biden and to the president-elect Biden. And it doesn't mean that he gave up totally, because Rudy Giuliani is continuing to file suits and fight in the courts. But I think we all know that this is basically already, the fate of the president is already decided. On the other hand, something that I would think, yeah, by the way, this is also something that I wanted to show you. This rise is due to PayPal announcement. Okay, so up to this point, I mean, it was going up, going down, more or less on the same level. This is the moment of PayPal announcement that is going to accept Bitcoin as a payment instrument, and this is where it's all started. So this is also like illustration of what we were talking about last week about fundamental analysis. Something that the news that in mind of traders and investors means that intrinsic value of the asset went up, is going up. At the same time, also like a small illustration of the idea that you cannot predict, you cannot be sure what's going to happen in the market. I mean, at the same time, this is gold on your screen. Gold, yes, this is gold on your screen from my own personal trading. And this is approximately the time when the gold were supposed to go up, but it didn't. It went down without any particular news fundamental reason. So the major conclusion is we are going to go by the strategies which are backed by fundamental and technical analysis, but we should not be surprised if it's going to snow in July in New York or London. Okay, on the negative, well, I don't know whether it's fully negative, but every week brings some government news, some administrative news about Bitcoin usage, cryptocurrency usage in general. I don't know whether you're going to think it's good or you're going to think it's bad for the coin, but one of the major world companies, one of the countries, one of the countries that defines the fate for the last year in the international politics, Iran, adopts Bitcoin, fully adopts Bitcoin for its international trade. Of course, this is a measure to avoid sanctions, avoid internal problems, because real, the local currency, is in a deep trouble. And they think the people who are behind the financials of Iran think that that might help. Well, we'll see. We'll see, but again, as I said, this is a mean to avoid sanctions, the same way as Venezuela did as an answer to U.S. sanctions, U.S. imposed sanctions. South Africa now requires all cryptocurrency service providers to register with their governing body, with their financial government bodies. I would say this is a good news. I mean, this takes Bitcoin out of dark alley of international trade, which it is still there. I mean, because it's used by not only Bitcoin, cryptocurrency, especially, for example, Monero, which is totally anonymous. But Bitcoin is also used for this for some shady operations. And so I would say this is, even though it's additional regulation point, I would say it's a good thing for the long run, for the reputation and for the way people see cryptocurrency in general and Bitcoin in particular. And in the same regard, new Netherlands, new Dutch law requires exchanges and also sellers to inquire from prospective buyers what is the reason they want to buy Bitcoin. Not only Bitcoin, but I think it refers to other cryptos as well. What is the reason for that? I mean, why do you need Bitcoin? What are you going to do? You're going to buy yourself a house, play poker, or build a nuclear bomb for something not very good. Also, in the long run, the more regulations there are, none of these regulations actually makes decentralized character of the coin. It doesn't change it. So we'll see what's going to happen. I hope that, as we said last time, we're going to, of course, I'm sure I said this, I think already, we're going to see major profit-taking slide down. Hopefully it's going to be temporary. So now to trading itself. What are we going to talk about today? Mostly two major topics. One is algorithmic trading. And this is very, very important because this is the name of the game of technology, algorithmic trading. What are the definitions? I mean, the terms that we're going to use when we are going to discuss algorithmic trading's benefits and drawbacks. Well, first of all, what is algorithmic trading? What is quantitative trading, automated, and high-frequency trading? So I think you're going to laugh at the next sentence. Algorithmic trading means turning a trading idea into an algorithmic trading strategy via an algorithm. Three algorithm words in the same sentence, but I try to do it slightly different. I don't know how. So this is how it is. Basically, you take an idea, you take ideas behind your analysis, you put it in a strategy, and you pack it as an algorithm. Okay? It could be back-tested on historical data, and it also could be executed either manually while you're sitting at your computer or in automated way. We do it in automated way, and it works like a charm. I'm sure all of you know this already. Quantitative trading involves advanced mathematical models, and this is basically the ground for analysis. I mean, this is how you analyze trading, and this is how you put it into algorithms for algorithmic strategies. Automated trading, it's a very simple definition. That's something that is done by your computer without your involvement. So you generate, submit, and execute orders. Not you, computer does it, automatic system does it for you. We will talk a little bit about it later to explain what are the good things about it. And quite high frequency trading, we already talked about it, I think, last time for those who were not here. It's trading algorithmic strategy which is executed in automated way, basically on a very, very short time scale, like milliseconds. for decision, milliseconds for getting into the market, and very, very short time for getting out of the market. Okay, it makes very, very little profit per trade. Therefore, in order to be successful, as we already talked about, it means profitable in this in this regard. To be successful, one needs to execute millions of trades every day. Obviously, it's not possible to do manually. That's why algorithmic trading is something that's very, very essential for high-frequency trading. Not very essential, I mean, it's absolutely necessary. And again, as I said, this is what crypto technology does, and this is the way it makes money for our colleagues and partners. Not going to talk about this a lot. I mean, everybody, I'm sure, know how the software programs are written. You use software computer codes. You use them for entering, first of all, defining, entering, and exiting the trade, any trade, and you use parameters, market parameters, in order to make a decision. Parameters like price, like volume, and many indicators that we are going to talk over the period of over the time of our meetings. So when these parameters reach certain predetermined value, criteria, actually meeting certain criteria, trade system gives a buy or sell order on your behalf with your money, of course. Well, that's an important part of algorithmic trading. A person behind the computer with money in his or her Bitcoin wallet. Okay, this of course saves you a lot of time in terms of watching the markets, in terms of making decisions. You don't have to do this anymore. The system does it for you. The benefits, I'm not going to talk a lot about it because basically we did talk about it last time and shortly touched it this time. I mean, one very, very important, couple of very, very important things. One is that the trade is executed at the best possible price. What does it mean? Very, very simple. I know myself when I trade and I see the market meeting certain conditions that I have in my mind. I take the mouse or I print something in the computer on keyboard. It takes time. It doesn't take a lot of time. It takes maybe seconds, at the most minutes, but it does take time. And at that time, the market conditions could change. So algorithmic trading totally get rid of this problem, because the moment, the instant it sees, the system sees the certain parameters met, the trade is being executed. Okay, and executed very, very accurately. And this is very, very important. Second thing that is important, and I'm not going to go through all of these. Second thing that is very, very important in my mind is that it helps you to avoid mistakes, human mistakes. We're all human. I mean, if I had $1, like they say, for every time I pressed the wrong button for on my computer screen when I was studying many years ago, I wouldn't be a millionaire, but I would have a few $1,000s definitely. So automated trading takes this worry out of your mind and out of every trader's mind. Okay? And very, very important that you could back test it. I mean, you can just apply it to the data which was collected before on a cryptocurrency or on any other asset and see how successful it is. And this is also very important. Again, as I said, it doesn't guarantee that 100% compliance with your prognosis, but at least it gives you a little bit peace of mind. And one thing that personally, for me, is very, very important, it takes the psychology out of trades, out of trading process. You don't worry that much, as much as you do when you trade manually. What are the top strategies? We'll not talk about all of them. We're not even going to talk about all these, but I mentioned a couple of those. One is the strategy that follows trend. Arbitrage trading, scalping, mean reversion, and mean reversion. Okay, we'll talk about every one of them, not in great details, but in few words. First of all, trend following strategies. Every indicator tells you the idea, gives you signs for a trend that has been established or is going to be established. It tells you everything about breakouts, price level movements, any other thing. So if you program this, you can use those for your automated strategies, automated trading strategies. And all the trend strategies are the simplest. I mean, let me mention something beforehand. I mean, when we're talking, no, a little bit later. So the trend following is the simplest way to trade because you don't have to be following the ever-changing market conditions all the time. And that actually makes cryptocurrency and especially Bitcoin trading a lot more easier than Forex trading. Because Forex trading, for example, as you know, there is a saying among Forex traders, both beginners and established and experienced ones, that market always comes back. Market goes in cycles. This is not the case of Bitcoin. This is not the case of cryptocurrency in general, because we are looking at the movement of like uniform movement of not fully uniform. I mean, of course, it's a retraction process moment, but we're looking at the rising market. Okay. So this is about trend following strategies, and we'll talk about some of them in details our next meetings, of course, of our next meetings. Arbitrage. I personally like arbitrage. I mean, the idea of arbitrage is very simple. Like, imagine you can buy, I don't know what, computer in one store, and then sell it for, let's say, $5,000, and then sell it somewhere else for $6,000. This is arbitrage. So any asset that is listed on more than one exchange, on more than one market, would be subject for arbitrage. And of course, it's next to impossible to manually watch several markets at the same time. Automated trading can do it. And there are people actually and companies and that make very, very comfortable profits, comfortable living based on the arbitrage strategy. And as I say, algorithmic trading is perfect for this because it's fast and because it's can watch many markets at the same time. Mean reversion. Simple idea. I'll show you a picture. This is Ethereum for, doesn't matter. No, it's not Ethereum. Yes, it is Ethereum. For a certain period of time, doesn't matter how when. You can see from here to here on the flat range, it changes the minimum, maximum, minimum again, to maximum, to minimum, to maximum. So this is like what is called mean reversion, and a lot of people trade using this strategy, especially when they're on the flat trend regions. Okay, scalping. I didn't mention scalping here, but it's also a very, very attractive idea for trading. Scalping is also existed for a long time, long before high frequency trading actually appeared. But the idea behind scalping is the same. You scalp, you take very, very thin profits of the market, and you do it fast and you do it often. So automated trading is also good for this kind of strategy. What do you need to do to have algorithmic trading set up? First of all, you have to be very skilled in computer. You have to be able to write programs, and even if you know which indicators you're going to use, you need to put them in a written way, like, for example, for those who are familiar, like an MP4 or MP5 on the advisor. You have to have very, very good connection to network, because if you lose connection, you may lose opportunity to do the proper thing, to evaluate and analyze the data properly, and you have to be able to you have to have data from historical data. Otherwise, you wouldn't be able to make sure that your algorithmic strategy is working properly. So you can have all this separately, or you can just go to Qubit Technology, which the company does all this for you and does it very, very effectively. Now, I want to talk about price action. Price action is the approach to the market that is based purely on the price. I mean, you're going to tell me everything is based on price. That's right, okay? But price action usually does not require any special indicators, any special analysis. You just look at the screen and you know whether you want to buy, whether you want to sell, or whether you want to go to the movies and wait until market changes, okay? So what is price action? How does it work? What does it tell you? And what are the strategies? We're going to talk a little bit about this, not in great details. We'll talk about everything that we're touching right now. We'll be talking in great details, because my objection is to make you a very good and successful trader. And believe me, I'll do it. Okay, just want to show you ideal and very, very typical price action trader screen. Here you have Bitcoin over USD hourly mainframe. Sometime around now, it's 24th of November, 8 o'clock, 8 p.m. 24th of November starts and ends 18th of November. No, 8 starts at 18th of November and ends at 24th. So a friend of mine who is a very, very successful trader, price action, he doesn't do anything else. What he does when he opens a new screen, he makes these lines. He takes every point where market changed its direction or settled in certain direction for some time, and he draws a line through it. And when he does it, he thinks, and actually the history shows that this is indeed what happens, he bases his trading ideas on the levels the market reaches certain levels. All these levels are support, resistance, and so on. And you will be able to read them very, very soon. And this is how people are using this. This is not my, I borrowed this slide from a company. So you can see, for example, this level where 2, 3, 4, 5 times, 4 times, the market changes direction. Once it was as a support, and 3 times as a resistance level. Same, for example, here, 6, 7, and 8. You can see that levels are the same. How does it happen, you may ask? What is the magic behind it? No magic. I mean, people usually do remember how they traded. When we talked about it also already, when the direction changes, it means that when the market goes up, it means that more people are buying than selling. When the market goes down, it means that the more people are selling than buying. And the market is flat, it means that a lot of people are buying and selling here, about the same amount. And of course, people are trying to use what they did previously, with like employ it into the decision making for the future. So this is why it works. One of the reasons why it works, it's psychological. Now, in order to understand price action strategy, you need to know some textbook, which I'm sure 99% of you are familiar with already. But nevertheless, let me mention this. I'm sorry for maybe making it too dull for you, but for some people it will be useful. Every price action strategy is based on the idea of candle and Japanese candlesticks. Japanese candles. What is a candle? We saw the picture like in the market. Well, I'm not going to look for it, but like here, all these. Oh, okay, here. All these vertical lines are, each one of them is a candle, Japanese candle, and the filled one are those during the time. And each one represents a certain period of time. This one in particular, every candle, every line is a change of price of the asset during 1 hour. Okay. Almost every screen, market, exchange, or platform, or anything that you open will have as one of the options a Japanese candle. So, okay. As I said, the filled one was for market going down, and the empty one is for the market going up. I mean, it depends on the setting of your platform. So what it is, full body, this is the body of the candle. It's, for example, in this case, for the candle, for the market that goes down. At this level, the market opened, the hour, or a minute, or a day, it depends. And at this level, it ended. Okay? At this level, it closed. What are these little tails up and down? These are the signs where the market was during this hour. It may open at 100 and close at 110, but during this hour, it could be during this time frame period. Let's say it like this. During this time frame period, it could be a lot higher at 120 or a lot lower at 90. So these little tails, thin lines, show how high and how low the market went during this time frame period. Basically, the same thing for the buyer's candle, for the candle of the trend, upward trending market, and exactly the same thing. So this When the market goes down, we call it bearish trend. When the market goes up, we call it bullish trend. And of course, there is always flat market. I showed you the example of flat market with Ethereum. I think it was Ethereum. Okay, so now how do you use these candles, the knowledge of this candle, the information that these candles give you in order to make a decision? When you see a candle like this, it looks like this, it's called hammer. What does it mean? It means that most of the time that it tried to go down, but it didn't go down. It actually signals for the bull market. Well, the hammer, and it points up. Okay, I think it's obvious. I can't find the words to explain it in details, but I think it's obvious. The opposite of that is what's called the shooting star, the candle which is all down. And that is, of course, the signal for the market for downward market trend. And there are two different kinds of, well, it's one, but they're different for bullish and for bearish market. When the next candle, as you can see, is fully inside the previous one. What does it mean? It means that market is not sure where it wants to go. If it's not sure, believe me, you're not sure either. Don't do anything until you are almost, I'm not going to say absolutely, almost sure in which direction you want to go, whether you want to buy, whether you want to sell, or as I said, you want to go out to lunch. Okay. Example of using this Harami method in price action. For example, this one, and this, and this symbolizes the indecisiveness that broke from the channel upward, and these two on the symbolizes, you see this small one downward symbolizes the idea of bearish market. So you watch for these patterns. I mean, they're not often going to be as clear as they are on this screen, but still you can be able to find, you will be able to find the right one. And please don't make any move until you see a clear pattern. Okay. So basically, in a conclusion, what can I say? I will say that this is a very, very important and very powerful tool, price action tool for trading. It's based on, it doesn't involve any sophisticated, any complicated ways of trading, in indicators. It doesn't require knowledge of RSI, doesn't require knowledge of stochastic oscillator, Fibonacci, nothing of that sort. All you need to do is to look at the screen, draw the lines, and make a decision. And you will make the right decision, I'm sure. You're all very advanced here. We'll make the right decision, and I'm sure that you will be very, very successful yourself and the company, QB Technology. If you have any questions, as I already said, send them to me in the chat on your streaming service. And next time I'm going to talk about a couple of things. One of them is this new strategy that I'm going to introduce. And the second, or maybe the first, a very, very important notion that actually still makes a lot of people wonder what it is, but I'm sure that after we meet and I'll explain and tell you what it is, you will be those who will go around spreading the word. What is the blockchain? How does it work? How people make money with blockchain? And how can it be used for all different kinds of application. Thank you very much. I wish you very, very happy trading. I wish you very, very profitable trading today, tomorrow, and every day and week and month of the year. And happy Thanksgiving to me. Happy Thanksgiving to those who celebrate it. I'll see you next week.